Hello friends, welcome back to Senior Spotlights, the website for seniors. That's those of us who remember when phones had cords, cars had ashtrays, and the cloud was something you yelled at for ruining your picnic. I'm Ed, your host. Click subscribe below. Never miss one of our videos. Today's episode is all about tax savings, the kind the IRS actually allows. We're talking real, legal, government-approved tax goodies for seniors. And trust me, some of these are so generous, you're going to wonder if Congress actually passed them on a Friday when everyone was trying to get out of there and get home early. We'll highlight 10 different savings to watch for. So here we go. Number 1, the 0% long-term capital gains tax bracket. Yeah, 0. If your taxable income is below roughly $47,000 if you're single and $94,000 if you're married, you may qualify for a 0% capital gains rate. That means you can sell stocks, mutual funds, ETFs, and pay nothing in federal capital gains tax. And why seniors love it? Well, you can rebalance your portfolio, you can harvest gains, you can sell appreciated assets without giving Uncle Sam a cut. It's like a senior discount from the IRS, which is possibly the rarest discount on earth. Number 2, and this comes from the Big Beautiful Bill Act. It's $1,000 in baby seed money. Now let's talk about that. It's, out of that big bill, it's pretty wild. Congress basically said every newborn from January 1, 2025 to December 31st, 2028 gets $1,000 to start their financial life. If you're a grandparent, this is a golden opportunity. You can help set up the account, you can help manage it, and you can add up to $5,000 annually to the account. Grows tax deferred till age of 18. And you can brag about it at brunch. Imagine telling your friends, "Oh, my granddaughter already has a retirement account, and she's 3 weeks old." The seed money grows tax advantage, and you can add to it. It's like planting a financial tree and no water required. Number 3, the $6,000 senior deduction. This is another gem from the Big Beautiful Bill Act. It's an additional $6,000 deduction for seniors. This is on top of the standard deduction. It's Congress's way of saying, we know everything's costing more, but here's a coupon for you. This deduction reduces your taxable income, which can help you qualify for a lower tax bracket. The 0 capital gains rate that we talked about earlier. Lower Medicare IRMAA surcharges. And bragging rights at the Senior Center. Number 4, property tax breaks. Many states offer senior freezes, senior exemptions, senior circuit breakers. Basically, the government says we can't stop your property taxes from going up, but we can slow them down a little bit. Number 5, the Augusta Rule. You can rent your home, even to yourself. Yeah, the Augusta Rule. It's a tax strategy so elegant it feels like cheating, but it isn't. Here's the deal. You can rent out your home for up to 14 days per year and not pay taxes on that rental income. Why? Well, because people in Augusta, Georgia rented out their homes during a Masters golf tournament, and Congress said, hey, sure, why not? How seniors use it? Well, you can rent your home to your own business, to your kid's business, to a club and organization, or a film crew if you want to feel glamorous and maybe even have a reality show. As long as the rent is reasonable and documented, the income is tax-free. Yeah, I'm already planning to tell my accountant, I rented my living room to my rental YouTube business for a strategic planning retreat. Well, the strategic plan was really to take a nap. Just kidding. Number 6, medical expense deductions. If your medical expenses exceed 7.5% of your income, you can deduct them. Given the price of hearing aids, dental work, or anything involving the word specialist, this could add up fast. Number 7, the gap year Roth conversion. This sweet spot. This one's a beauty. Your gap years are the magical period between when you retire and when Social Security and plus RMDs start. That's required minimum distributions. During these years, your income may be low, which means you can convert money from a traditional IRA to a Roth IRA at a much lower tax rate. Why seniors love it? Well, you pay taxes now at a discount. Your Roth grows tax-free. Your future RMDs shrink. And your heirs think you're a financial wizard. Number 8, qualified charitable distributions. Give money, pay no tax. If you're 70 and a half or older, you can donate directly from your IRA to a charity using the qualified charitable distribution, a QCD. The money goes straight to the charity. It counts towards your RMD. It's not counted as taxable income. This is the IRS saying, if you give money to charity, we'll pretend we never saw it. Why this matters? Well, it's lower taxable income means lower Medicare payments, lower taxes, more money for things you actually enjoy. And plus you get to support the causes you care about. Number 9, the Saver's Credit. Seniors can still qualify. If your income is modest and you contribute to retirement accounts, the government still gives you a tax credit for saving money. It's like getting a pat on the back from the IRS, and it's financially helpful. And lastly, number 10, energy efficiency credits. If you install heat pumps, insulation, or solar panels, you may get tax credits. Plus, you get to brag that your house is greener than your neighbor's lawn. In closing, there you have it. Full buffet of free, legal, IRS-approved tax savings for seniors. Remember, you worked hard for your money. You saved it. You invested it. You survived the 70s, 80s, 90s, and whatever the 2000s was supposed to be. You deserve to keep as much money as possible. And if the government accidentally left a few loopholes laying around, well, hey, who are we to waste them? Thanks for joining me today on Senior Spotlights. Until next time, stay well, stay curious, and keep thriving.